In our previous video, we spoke about the current sentiment in the uranium sector. As the sentiment is bottoming, opportunities are arising. And I see quite a few opportunities again in the uranium sector, as the valuations of most companies have started to reach equilibrium to the extended highs that they reached in what we would quote, let's say a mini mania phase. One of these oversold stocks is Govi Uranium, which I feel is not warranted given the sell-off this company has seen, because there hasn't been actually any substantial news that I know of that has derailed the thesis in this specific company itself. As you can see, it's declined from its highs of September 2021. It's declined around 68%, which is quite a huge decline. It's I can understand maybe when people are getting very bullish and they're buying around this period, and now they're seeing a decline of 68%. It probably is hard, and they just thought, I'm just going to get out of it, cut the losses. And you can also see the RSI is extremely low. And one very interesting aspect is that this stock price is actually now trading at the same level it was trading in November 2020. Now, if I think back, and if someone was to ask me, hey, do you want to get all of your full position in all of your uranium stocks, and I give you the date that is November 2020, yeah, I would say 100%. I really wish I had gotten like full positions around this time. So the chart looks great. It's declined substantially enough for me to be interested. Now the next step is that we want to actually see, what does this company have? How many pounds in the ground does it have, etc. Govi is a African-based uranium company. I do like this. Many people may shy away given the political risk, but I would argue there's just as much political risk in North American companies. And one of the benefits you can see is that the mining permits are much quicker to be granted, and Govi already has a mining permit granted, which is great news for them. Secondly, I would like to highlight that the deposit is very big. As you can see, they have already a resource inventory with over 130 million pounds measured and indicated, and an additional 89 pounds of uranium inferred. So altogether, they have over 200 million pound deposit of uranium. Another big plus is that although Nigeria does have huge political risks, we've also seen that Global Atomic is in the same country, and they're moving ahead with their mine build out, and that seems to be going very well. So that's a good sign that Govi will also be able to build their mine this cycle, and that Global Atomic is kind of just leading the way and showing what can be done, giving more confidence to investors or financiers, and also the government regarding the royalties that they would receive from Govi. Another plus for Govi is that insider ownership is high, which is great to see. That means that the management team behind Govi believe in the success of the company and believe that they will get a substantial return for their capital invested in the company. One con associated with the share structure is that Govi does have 600 million shares outstanding, which is never good to see, but it is what it is, and it needs to be reflected in analysis of this stock. So overall, Govi has over 200 pounds of uranium in the ground, with the possibility of expanding this given their exploration deposits in 2 other countries. Now, if you take a look at the current market cap, it is going for around 100 million. This is actually 6 times cheaper than Global Atomic. Now, Global Atomic may well be a safer bet, but it definitely will not give you the outperformance that Govi may give you. So I think it is undervalued, given the fact of where I see the uranium price spiking to. Now, Govi is not the cheapest producer. It needs around 60 to 65 spot price just to get started. Now, that is just to get started. That is not to say that they will be selling all of their future productions at 65, which probably will not be a good bet for Govi. I think this company will really start to scream in stock price valuation once uranium hits $80 per pound. So in the end, Govi really is a play on high uranium prices. Now, if you want a low cost, low geopolitical risk, near-term producer, you buy something like Encore. Now, if you want something with very high torque that is dependent on the uranium spot price, you would go with something like Govi. Of course, Govi does have a lot of risks. One, I think they need cash. They need to be financed for their mine to be built. And maybe finances, given the current market conditions, aren't really willing to finance projects, especially in high political risk areas such as Nigeria, Africa. But if you are willing to take the political risk, which to be honest is no greater than the political risk I see in North America, and you are very much aligned with your expectations of the uranium price, then I'm expecting Govi to be re-rated much higher, especially once uranium hits that $80 mark. And I think at that point it could probably be a 5x from its current lows given today.